Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Tesla stock, Mullen stock, as well as Lucid stock. For Tesla, we're going to talk about their semi-truck deliveries and how this is going to act as a phenomenal catalyst for not only the share price, but also the overall company's momentum. After that, we're going to move on and we're going to talk about Mullen stock, ticker symbol MULN, which is another electric vehicle company like Tesla, but it's more of a startup company, and if you are invested into this company, which I've always been very critical of, you should mark your calendars for December 20th, and we'll get into why that is in a moment. After that, we're going to talk about Lucid Motors, ticker symbol LCID, which is another electric vehicle company. Lucid stock has been pulling back and falling lately, so we're going to be going over the details of why that is, and they're not alone in that. Many other EV companies are falling as well, so we're going to be going over some macroeconomic and stock market news as well. And then lastly, we're going to talk about why Lucid is actually offering their employees around an $18,000 discount if they choose to buy a Lucid vehicle. So for more electric vehicle stock news updates on Tesla, Lucid, or Mullen stock, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. So we're going to start off with Tesla, talking about their electric semi-truck deliveries. Tesla is an electric vehicle manufacturer, and they also specialize in energy storage as well as energy generation, but in this video we're going to talk about Tesla's electric vehicles, particularly their new semi-trucks, which have been delivered as of right now. The TSLA share price is currently trading for around $117, while professionals believe the company is somewhat undervalued right now because according to analysts, the company could surge as high as $436 or even at minimum to $263 over the next 12 months. However, for me personally, I do think that Tesla is overvalued on a PE ratio basis, and I'm waiting for Tesla to pull back, even though they've already pulled back pretty substantially, but I do think that it is trading at a high premium right now, and eventually the market will pull Tesla back in their share price, so you may be better off just dollar cost averaging into this company. But with that being said, let's go over this phenomenal Tesla catalyst that started last Thursday when they kicked off their semi-delivery event, particularly referring to their semi-trucks, which have around a 500-mile range when fully loaded. So this has the potential to be a huge winner for Tesla as a company, which could also invigorate their share price. Back in 2017, Tesla unveiled their original concept for their electric semi-truck, and many people were naysayers and doubters, including the likes of Bill Gates. However, Pepsi was one of the companies that actually believed in Tesla and ordered around 100 trucks. Originally, these trucks were supposed to be in production in 2019, but that later got delayed because Tesla wanted to focus more on churning out their Model 3 sedans instead of focusing on their semi-truck deliveries. So although that caused the stock price to be quite volatile, we can now say that the semi-truck is complete and they are ready for delivery. But what's the overall advantage of the semi-truck compared to other diesel-fueled trucks? Well, for instance, apparently the Tesla semi-truck has 3 times more power compared to a diesel-fueled semi-truck. So this allows the truck to have faster acceleration, and it can also brake more effectively than their diesel-fueled counterparts, which is definitely a technological and competitive advantage that is going to go to Tesla. Like I said, the share price has pulled back over the last year or two, but if we look at their various accounting ratios, we could anticipate that the company could continuously pull back even further because they are trading at a premium. And maybe they won't pull back in price anytime soon. It might be 1 year, 5 years, 10 years, but eventually the equilibrium of the market will decide to pull Tesla's share price back, very similar to what's happening right now with it. But despite this, we are getting fantastic news from their semi-trucks, which many have said is going to be a game changer. For instance, Elon Musk even clarified that their range of 500 miles particularly refers to when the semi-truck is fully loaded. So clearly they're going to be able to get more mileage from the semi-truck when it's not carrying a payload of around 82,000 pounds. And this is very interesting because 82,000 pounds is actually around 2,000 more pounds that is allowed for other Class 8 trucks that are powered by fossil fuels. So again, there's another competitive advantage where the Tesla semi-truck can carry more products and a heavier load compared to their fossil fuel counterparts. So right now, Tesla semi-trucks have three main competitive advantages. That is their braking efficiency, their acceleration capacity, as well as them being able to haul and carry a larger load compared to their counterparts in competition. However, now let's talk about the advantages of some diesel-powered semi-trucks. For instance, a diesel-powered truck can travel 1,800 to 2,000 miles before needing refueling, according to a multitude of sources. Now, this also depends on the type of semi-truck that we are talking about, but on average, that's a pretty accurate statistic. So clearly, diesel-powered semi-trucks go substantially farther than the electric power semi-truck. So I'm going to give that advantage to traditional semi-trucks that run off of diesel. However, what about the ability for these trucks to be either refueled or charged? Tesla semi-trucks will require a high amount of power, and therefore they will need megachargers, according to Musk. These chargers have the capability and capacity for up to 1 megawatt or 1 million watts, which means that these chargers are going to be able to charge a semi-truck 70% of its full battery within 30 minutes. However, how does this compare to diesel trucks? Well, diesel semi-trucks can fill up almost their entire tank within half an hour, therefore 30 minutes. So I'm going to say, in regards to fueling capacity, I'm going to give the advantage again to diesel trucks. But in the end, I am very excited that Tesla does have electric vehicle semi-trucks that multiple companies will buy due to the technology that these trucks have. In the end, I do think that Tesla holds the technological advantage by far over traditional diesel trucks, but I wanted to do a relatively fair and unbiased comparison. So overall, this is great news for Tesla. The next company we're going to talk about is Mullen, ticker symbol MULN, and Mullen Automotive is another electric vehicle company which currently trades for just pennies per share. Right now, they're trading at around 18 cents per share, and I've been very critical of this company. I don't think this company has proven itself as of yet, and I do think that the reverse stock split is going to go through, so they do not get delisted. However, with that being said, I personally would rather wait for this company to prove themselves before I invest my hard-earned money. But if you are invested into this very speculative company, you need to be aware of the catalyst that could occur, or perhaps maybe a negative catalyst, on December 20th. Mullen Automotive has announced that it has entered into an agreement with Newgate Motor Group. But what's so special about this? Well, Newgate has over 40 years of experience in the automotive industry, and it's also a top-tier retailer for new and used Mercedes-Benz as well as Kia vehicles over in Ireland. So overall, this is going to be a very good partnership between these two companies. But what do investors need to know about this particular agreement? Well, this agreement has terms in it in which Newgate will purchase around 500 vehicles per year from Mullen Automotive. Mullen has stated that it anticipates that they will deliver their vehicles, or at least have them shipped out, on December 20th. Now, if you remember a previous video, we have seen Mullen actually miss these various shipment dates, but that doesn't mean they're not going to deliver them at all. It just means that it's going to be somewhat postponed, similar to what we saw with the Tesla semi-trucks. But in the end, it's not doing Mullen any favors if they decide to miss or end up missing a shipment or delivery date, because this is going to act as a huge major milestone for Mullen, and it could increase the overall share price. But as of right now, I really don't see the huge appeal to this company, considering that financially and fundamentally, I am not seeing the value in this company right now. But my mind could change in the future. But again, as of right now, I do not hold any Mullen stock in my portfolio. It's far too risky, especially during a time of stock market uncertainty where the share prices of multiple great blue chip companies are falling right now. Why would I want to risk it on a penny stock that has yet to prove itself as a company? But I would love to hear your thoughts down below, because who knows, maybe this company could work out in the long run. We'll just have to keep an eye on it. And then lastly, we're going to talk about Lucid Motors, another electric vehicle company which currently trades for $8.62. Lucid, to me, is a premium electric vehicle company, and analysts believe the company should be worth anywhere between $10 and $26 over the next 12 months. So considering these current price predictions, we could say that the current share price is undervalued, but again, we should take these predictions with a giant grain of salt. These are just there for us to use as a guide. That's not necessarily what this company should or even could be worth in the future, and that's why you should always make sure to do your own research. But the reason why Lucid is in the news today is that their share price has dropped by around 8.2 0.22% for relatively no reason. There is no company-specific news that has caused this company to fall in their overall share price. Now, I think the reason that Lucid is falling right now is because the overall stock market actually has pulled back recently due to renewed fears about what the Federal Reserve is going to do in the month of December, because many investors are concerned that the Fed will increase interest rates to fight inflation more than 50 basis points or 0.5%. So let's dive into that to see what's on the Federal Reserve's mind, because this is going to dictate whether or not the overall stock market either starts to fall or if it starts to rebound. Investors right now are paying attention to December 13th. And that's going to be when the Fed meets again to decide whether or not they're going to raise interest rates by an additional 50 basis points. And higher interest rates is a double-edged sword because, yes, it gets inflation under control, which is good, but it's going to temporarily in the short term hurt growth stocks pretty substantially. Because as interest rates increase, that's going to translate to higher costs for any debt that these companies have, and it could even impact potential vehicle purchases because it's going to hurt consumers' bottom line. High interest rates as well as inflation will both hurt the bottom line of various consumers. But Lucid isn't alone in the decline in their share price. Tesla has pulled back pretty slightly as of late, as well as other electric vehicle companies, which would include Rivian as well as Blink Charging. Now, to round off this video, I do like how Lucid is actually going to give their employees an $18,000 discount to buy their Lucid vehicles, which is pretty cool in my opinion. However, we have to keep in mind that these vehicles are extremely overpriced because they're for the premium market. For instance, the Limited Air Dream Edition and Grand Touring Performance starts at a price of $154,000. But the good news is that a spokesperson from Lucid actually told Insider, which is where this article is coming from, that, and I quote, "We have always wanted to find the right time to help reward our employees who are interested in driving a Lucid Air every day." So I actually think that is pretty good that they're giving their employees a discount. They didn't really have to do an $18,000 discount, and it's also going to help them with overall sales. Now, another reason why the LCID share price could be falling is that Lucid produced a total of around 3,687 vehicles in the first 3 quarters. However, they initially aimed to build between 6,000 and 7,000 vehicles in total for 2022, and they haven't yet released vehicle guidance for 2023, but in my opinion, there's no way Lucid is going to meet their original production estimates between 6,000 and 7,000 vehicles. So technically, investors could be let down by that fact, which is why the share price could be falling. Lastly, we also saw a drop in reservations for Lucid because they originally had 37,000 reservations in quarter 2, which decreased down to 34,000 in quarter 3. But that's actually to be expected considering the current stock market and the overall economic environment that we are in right now. There's nothing inherently wrong on Lucid's end that has caused the reservations to drop. It's just because consumers are now more strapped for cash, which is why they had to drop their overall reservations. But what do you think? I would love to hear your thoughts down below about Lucid, Mullen, as well as Tesla. Go and smash that like button for more EV stock news updates just like this one. Subscribe if you are new, and I will see you in the next YT video.